Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings, so you don't have to. Today we're diving into Quest Diagnostics' latest proxy statement, and spoiler alert, it's not just about who's on the board. We are going to see how the executives are getting paid, what they think about an emergency shareholder meeting, and how you can get in touch with the board if you have some concerns. Scroll proxy statement pursuant to Section 14 ES of the Securities Exchange Act of 1934 scroll. This proxy statement is their official invite to their annual meeting and a way for them to ask for your vote on some key issues. Let's break down what you as a shareholder should be paying attention to. Scroll annual meeting of stockholders, Quest Diagnostics Incorporated scroll. First up, the meeting itself. It is on May 15, 2025 at their headquarters in Clifton, New Jersey. Important stuff on the agenda like electing directors, talking about executive pay, and even a shareholder proposal. Speaking of directors, there are 10 folks up for election. The proxy statement gives you a little bio on each of them, highlighting their skills and experience. It ranges from retired executives from companies like FedEx and Toyota to doctors at Memorial Sloan Kettering Cancer Center. Quest wants you to vote for all of their nominees because obviously they handpicked them. For example, Robert Carter recently retired from FedEx and has a lot of expertise in cybersecurity. Timothy Main, who has been a director since 2014, brings a ton of experience from the technology world. The board says they believe these people have the right stuff, from ethical standards to relevant industry experience. It's also important to know whether the directors are truly independent. The board says that 9 out of the 10 nominees are independent, meaning they don't have any major financial ties to the company except for the CEO, James Davis. Quest says they're all about listening to their investors, reaching out to big shareholders to hear their concerns. They are happy to talk about governance, executive pay, and even their social responsibility. If you want to suggest someone for the board yourself, you can send your recommendations to the lead independent director, but do it before the next meeting. Let's talk money. The proxy statement outlines how much the directors get paid. The lead independent director, Timothy Ring, made the most at just under $380,000 in 2024. This includes cash and stock awards. The company changed its compensation structure in the middle of 2024, increasing the annual cash retainer but getting rid of committee membership retainers. It is good to see that the company requires its directors to own a significant amount of stock. So if the company does well, they do well. This is a best practice because it ties their interest to the stockholders. Time to talk about the executive pay. Every year, shareholders get to vote on whether they think the executives are being paid fairly. This is a non-binding vote, meaning the company does not have to listen to your vote, but they usually do. But it's a way to voice your opinion. The company says their executive compensation program is designed to pay for performance and align the executives' interests with yours. They are trying to attract and retain executives that will help them achieve their strategic objectives and ultimately increase the price of the stock. The company highlights some good numbers like revenues increasing almost 7% to $9.87 billion in 2024. The diluted earnings per share also came in at 7.69. A big thing they are focused on is improving their relationships with health plans. They also consummated 8 acquisitions. The average annual incentive payout for executives was about 97% of the target, so not bad, but also not the maximum amount. Also, the payout on performance shares was 157% of target. Quest says their compensation philosophy is all about aligning executive interests with stakeholders, using performance-based metrics, and supporting long-term business strategy. Most of the executives' pay is variable, meaning it is tied to the performance of the company. The document also mentions a lot of things that they do, like linking executive pay with performance, having a clawback policy to take back money if something goes wrong, and having share ownership guidelines. They hired an independent compensation consultant, Pearl Meyer, to help them make these decisions. The goal is to be competitive with other similar companies, but also to reward individual performance. The financial goals were heavily weighted in the 2024 executive pay formula. One important metric was the adjusted diluted earnings per share and revenue. In addition, 20% of the score was non-financial, including patient experience and community impact. In these results, you can see the company adjusted some of the expenses and revenue to account for the acquisition of Life Labs, which occurred in August. This adjustment decreased their earnings for compensation calculations. Ultimately, James Davis, the CEO, ended up with over $14 million in total compensation. Sam Samad, the CFO, ended up with just over $4 million. Another important thing to consider is how their equity vests. Stock options and RSUs usually vest over 3 years, and there are some accelerated vesting rules if there is a change in control or termination in employment. The next big item is about their auditor. The board wants you to ratify the selection of PricewaterhouseCoopers LLP, teamed as PwC, as their independent auditor for 2025. The Audit and Finance Committee is responsible for hiring and overseeing the auditor, for hiring and overseeing the auditor. In 2024, PwC was paid $4.5 million for audit work and $340,000 for tax services. Scroll roles climb itself the board and its committees in risk oversight scroll. This document mentions how the board is responsible for overseeing risk, with different committees focusing on different areas. The Audit and Finance Committee has primary responsibility for overseeing risk, and the Cybersecurity Committee focuses on IT security. Finally, there is a shareholder proposal on the ballot. John Chevedden wants to change the rules for calling a special meeting. Currently, you need to have owned the stock for at least a year to call a special meeting, and John wants to get rid of that rule. His argument is that in an emergency, waiting a year to call a meeting is useless. The board is against this proposal. They believe that the 1-year holding period protects against special interest groups who may not have the best long-term interests of the company in mind. If you have your own proposal you want to make, you need to submit it by December 5, 2025 to have it included in the next year's proxy statement. For those of you interested in the financial nitty-gritty, the annexes include some details, including reconciliations of non-GAAP measures to GAAP measures. Quest has a lot of corporate responsibilities, such as making a healthier world and building value for its investors. It also tries to maintain initiatives to conserve resources and minimize the negative impact on the environment. Quest has been named one of Fortune's most admired companies in 2025 for the 11th consecutive year. So what do we make of all this? Quest Diagnostics seems to be in a stable position with steady revenue growth and a commitment to returning value to shareholders through dividends and stock buybacks. However, it is important to keep an eye on the adjustments they are making to their financial results for the purposes of calculating executive compensation. This might be a sign that they may have a hard time meeting some of their goals. The ongoing debate about the special meeting requirement highlights the tension between shareholder rights and protecting the company from short-term agendas. Their growth strategy seems heavily reliant on acquisitions, which can be risky if not managed well. Overall, Quest Diagnostics appears to be a well-managed company in a stable industry, but it is worth keeping an eye on how their acquisition strategy plays out and whether they can continue to meet their financial targets. That's all for this episode of Corporate Decoder. If you found this breakdown helpful, give us a thumbs up, drop a comment below, and don't forget to subscribe for more deep dives into the world of corporate filings.